Hey everyone, hello Chris. Hello Harun. How is everyone doing? Please let me know if everything is okay. And we're gonna start with setting some treasure boxes. And I think we need to update our life goals because we have reached our goal for the day. Confirm. Alrighty. I'm good, Harun. Thank you for asking. Alrighty. I think everything is good and everyone is ready. Please share the live with your friends. Let me set up some goodie bags too. So share this live with your friends. Hello, Eren. Welcome. You were just calling me. Yes. Selim is here as well. We have so many viewers. Thank you for the likes, guys. Please, if you want to gift, use the gifts from the live goal. And I think we should start. Yeah? So, what did we read yesterday, if you remember? I think I hope my camera is all good here. Doesn't look weird. Alrighty. So, yesterday we started reading about the financial literacy and why it is important. So, if we scroll up a bit, let's just read the highlights from yesterday, right? So, there was a thing about financial literacy, and that it's not about how much money you make, but how much money you keep. And I think today, actually, in year 10s, we had a question of what is actually rich? How do you understand that someone is rich? Is it about the amount of money, or is it about how much money they make effortlessly, which means passively, which means passive income? And these are some things that we're going to be talking about today. So, some of our highlights. I'm concerned that too many people are too focused on money and not on their greatest wealth, their education, which highlights the importance of education, especially financial literacy. If they think money will solve problems, they will have a rough ride. Money without financial intelligence is money soon gone. And this is something that we discussed multiple times, I believe, in various uh, classes at different times, but that's basically it. The difference between rich people and poor people is their mindset, is how they treat money, how they use money, how they use money to make more money. So if you want to be rich, you need to be financially literate. So important aspect of education and financial literacy in particular. And that's the difference between rich people, oh my God, rich people and poor people. Rich people know how to handle money, but poor people, we graduate from school with virtually no financial foundation. And then on that foundation, we're trying to build our businesses, our wealth, and obviously it doesn't work. And then we came to the point that accounting is possibly the most confusing, boring subject in the world. But if you want to be rich long term, it could be the most important subject, accounting. And then we said that rich people acquire assets and the poor and middle class acquire liabilities and they think those are assets. So tonight we were going to learn about the difference between assets and liabilities, what they are, how they work, and why is it important to acquire assets. Alrighty. Thank you for sharing the live. Eren, what do you want? What I want is I want us to get to the stage two of the Life Fest 2025. So thanks for reminding. And tonight is the last night. So if we're not gonna make it after this 1 hour stream, I will do another live stream after 9:30 to make sure we get to stage two. I can be up all night until midnight. Oh, hello. Nam has joined us as well. Selim is here. Eren is here. And who else? We have Harun on YouTube. Alrighty. So the goodie bag is opening in 30 seconds. I will set up another treasure box. Why is it I cannot set up a treasure box? Ah, okay, because we gotta open the first one. Sorry, guys. Just give me a moment. And what? No one collected the treasure chest. That's very strange. Anyways, I'm setting up another treasure box. And why is it not listening to me? Goodie bag opened. No winners again, which is weird. I don't know what is happening. So please like the live stream. If you just double tap your screen, that will send us likes. Send comments. Enjoy the show. And let me set up another treasure box if I can. Something is not working with my setup here. Please bear with me. Nope. For some reason, I could not set it up. Anyways, let's continue reading. Rule number one. You must know the difference between an asset and a liability and make sure you buy assets. If you want to be rich, this is all you need to know. It is rule number one. It is the only rule. This may sound absurdly simple, but most people have no idea how profound this rule is. Most people struggle financially because they do not know the difference between an asset and a liability. And there is a question in the chat. Explain being rich and wealthy and the rat race. And it's very easy to explain, but I would like to dive into it deeper on our Saturday session. Rat race is your typical 9 to 5, where you study for many, many years just so that you can get a degree and a job. Then you get that job and you work another 40 years. And after all of that, you realize that it's just barely enough to pay your bills and maybe put your kids through education. That's it. That's what rat race is. You just keep going to work 9 to 5 every single day, and you end up with basically literally nothing. It is very hard to go anywhere further in life if you just do the typical 9 to 5. And you can look at the numerous videos on my YouTube or TikTok where most of those concepts are explained. And why rich and wealthy do things differently. This is why we're reading this book. And that's lesson number one was that poor people work for money, but rich people make the money work for them. They do not work for money. And this is what I'm trying to tell you guys by saying add value, add value, add value, because money in itself is nothing but a fiction. It's a concept. So financial freedom, yes, we can discuss financial freedom in details on Saturday. So let's see. Rule number one, is know the difference between an asset and a liability and make sure you buy assets. What I'm doing right now, you would wonder why is this rich guy sitting here reading us bedtime stories. I'm actually creating a digital asset. So YouTube video is an asset. Let's see how it works. Rich people acquire assets, the poor and middle class acquire liabilities, and they think are assets, said Rich Dad. When Rich Dad explained this to Mike and me, we thought he was kidding. Here we were, nearly teenagers and waiting for the secret to getting rich. And this was his answer. It was so simple that we stopped for a very long time to think about it. Like, seriously, guys, this is it. This is the secret to being rich, to being wealthy. Just make sure you buy assets. But you need to understand what is an asset. Don't worry right now, said Rich Dad. Just let the idea sink in. If you can comprehend the simplicity, your life will have a plan and be financially easy. It is simple. That is why the idea is missed. Most of the biggest secrets in life are the simplest secrets, in fact. It just is hard to understand. The secrets are so simple that they are hard to understand. I don't even know how to put it any other way. Let's go further. You mean all we need to know is what an asset is, acquire them, and we'll be rich? I asked. And that's it, guys. That is literally it. Yes, you need to know what an asset is, acquire assets, and you'll be rich. That's it. Rich Dad nodded his head. It's that simple. That's it. That's the biggest secret. So, if it's that simple, how come everyone is not rich? I asked. Rich Dad smiled. Because people do not know the difference between an asset and a liability. I remember asking, how could adults be so misguided? If it is that simple, if it is that important, why would everyone not want to find out? And that is the $1 billion question, literally, guys. That's all you need to know. That's the biggest secret. And yet, if you go around asking your parents, if you go around asking your teachers, even what's an asset and what's a liability, most people wouldn't know. Alrighty. So, uh, it's not bots num, it's because we set up goodie bags. So, let's set up another one. I don't know why my treasure chest is not working. But if you get some coins, please make sure you join our fan club and make sure if you like this stream, you share it with your friends and you spam the likes and you send some gifts from our live goals, which is Fest Pops and Fest Gears. Oh, and Eren, wow, thank you, by the way, for the amazing Fest Gear and the 11 Fest Pops. Um, Harun is asking, how is YouTube video an asset? And you will understand how it is as we keep reading. Asset is basically, let me give you a heads up. Asset is anything that puts money in your pocket. Things that make you money are assets. YouTube video that I record once and then it's on my channel working for me 24/7 is an asset. A TikTok video that I record and I post on my TikTok account, if I am monetized, it's a digital asset. That's that's a short version of it, but let's see how it is. Alrighty. It took Rich Dad only a few minutes to explain what assets and liabilities were. As an adult, I have difficulty explaining it to other adults. The simplicity of the idea escapes them because they have been educated differently. They were taught by other educated professionals such as bankers, accountants, real estate agents, financial planners, and so forth. The difficulty comes in asking adults to unlearn or become children again An intelligent adult often feels it is demeaning to pay attention to simplistic definitions. Now, this is where I think, guys, you have the biggest advantage because you're still young, because you're still not conditioned into believing that the only way to make money is to have a job. You have a chance and you have an advantage. You have a very unfair advantage compared to me, even. Yes, I'm successful. Yes, I've come somewhere in life, but I have limited time. I have lost half my health, literally, half my eyesight is gone. But you guys, you have your whole life ahead of you. So, Rich Dad believed in the KISS principle: keep it simple, stupid, or keep it super simple. So, he kept it simple for us, and that made our financial foundation strong. So, what causes the confusion? How could something so simple be so screwed up? Why would someone buy an asset that was really a liability? The answer is found in basic education. We focus on the word literacy and not financial literacy. What defines something to be an asset or a liability are not words. In fact, if you really want to be confused, look up the words asset and liability in the dictionary. I know the definition may sound good to a trained accountant, but for the average person it makes no sense. But we adults are often too proud to admit that something does not make sense. So, here we are, guys. If you want, screenshot this, write it down, memorize it. This is as simple as it gets: what an asset is and what a liability is. That's it. An asset puts money in my pocket. A liability takes money out of my pocket. That's it. That's as simple as it gets, and there is no simpler way to describe what an asset is and what a liability is. That's it. That's pretty much it. Whatever puts money in your pocket is an asset. Whatever takes money away is a liability. Thank you for following, guys, and thank you for sharing the lives. Thank you very much. Thank you for the gifts. To us young boys, Rich Dad said, what defines an asset are not words but numbers. And if you can't read the numbers, you can't tell an asset from a hole in the ground. In accounting, Rich Dad would say, it's not the numbers, but what the numbers are telling you. It's just like words. It's not the words, but the story the words are telling you. So, 20 years ago today, this book was written more than almost 30 years ago now. So, this is the new version of the book, which was uh, published, I think, about 8 years ago. So, learn, unlearn, relearn. This quote from futurist Alvin Toffler mirrors what Rich Dad told me 2 decades ago. The illiterate of the 21st century will not be those who cannot read and write, but those who cannot learn, unlearn, and relearn. So, this is what you guys need to know to be literate these days. Oh my god, we had so many people getting coins. Enjoy, enjoy, enjoy. So, why are we still at 250 likes only? Yes, Eren. What do I want today? I told you it's all in the live goals. We need fast pops, we need fast gear, we need fast cheers. So, actually, let me pin these gifts for you. Yep. Oh, thank you for the fast pop, Eren. Thank you. So, if you want to be rich, you've got to read and understand numbers. If I heard that once, I heard it 1,000 times from my rich dad. And I also heard the rich acquire assets and the poor and middle class acquire liabilities. This is another thing for you guys to remember. If you want to be rich, you've got to read and understand numbers. And yes, Eren, do it. So, you need to understand numbers, and more importantly, you need to understand the story that the numbers are telling. Here's how to tell the difference between an asset and a liability. Most accountants and financial professionals do not agree with the definitions, but these simple drawings were the start of strong financial foundations for two young boys. This is the cash flow pattern of an asset. Please pay attention. So, on the bottom is your balance sheet, where on the left you have all of your assets, which means things that put money in your pocket, and on the right side of the balance sheet you have liabilities. So the thing that you like to ask me so much about how much money I have and how much money I make. What you have is on your balance sheet. Assets is everything that makes you money, liabilities is everything that takes away money, which means in real estate, assets are all the houses or units that you have that generate rent and appreciate, which means increase in price, and liabilities are all the debts and mortgages that you need to pay. And as you can see here, the arrow goes from the assets to the income statement, which means they generate income. And in a way, that's the cash flow. That's how cash flows into your income statement. The top part of the diagram is an income statement, often called a profit and loss statement. It measures income and expenses, money in and money out. The lower part of the diagram is a balance sheet. It's called that because it's supposed to balance assets against liabilities. Many financial novices do not know the relationship between the income statement and the balance sheet, and it is vital to understand that relationship. So, as I said earlier, my rich dad simply told two young boys that assets put money in your pocket. Nice, simple, and usable. And this is the cash flow pattern of a liability. So, here we see that the money is going out of our income statement via expenses, which means liabilities will take away money from you. Now that assets and liabilities have been defined through pictures, it may be easier to understand my definitions in words. An asset is something that puts money in my pocket, whether I work or not. And please pay attention here. This is something that Yetens were asking me today. So, an asset is something that puts money in my pocket, whether I work or not. How do usual people get money? They wake up, they go to work, they get paid. How do rich people make money? They don't have to go to work every day because they have assets that generate money for them. Bowling, Merry Christmas. I would love to play Clash Royale, so when we're done with this live stream, I will probably do another one to play Clash. What? Am I 1679? Yeah, keep going because everyone's gonna be making a lot of points tonight. Alrighty. A liability is something that takes money out of my pocket. This is really all you need to know. So, whether you work or not, asset is gonna make money for you and liabilities will take it away. This is really all you need to know. If you want to be rich, simply spend your life buying or building assets. If you want to be poor or middle class, spend your life buying liabilities. Illiteracy, both in words and numbers, is the foundation of financial struggle. If people are having difficulties financially, there is something that they don't understand, either in words or numbers. The rich are rich because they are more literate in different areas than people who struggle financially. So, if you want to be rich and maintain your wealth, it's important to be financially literate in words as well as numbers. The arrows in the diagrams represent the flow of cash or cash flow. Numbers alone mean little, just as words out of context mean little. It's the story that counts. In financial reporting, reading numbers is looking for the plot, the story of where the cash is flowing. In 80% of most families, the financial story paints a picture of hard work to get ahead. However, This effort is for naught because they spend their lives buying liabilities instead of assets. If you have no money, will the bank let you borrow money? No. Bank will only borrow you money when they are sure you can pay it back. So you need to have money, you need to have cash flow, and you need to have positive cash flow to be able to borrow money. And you need to have assets to offset your liabilities. Hey, welcome Zahid. Just came home from my game. Alrighty. I think we can set up another goodie bag. Please share this live and you will get. Ooh, you spent so many coins. Eren, thank you very much, man. Thank you very much. You are spoiling us tonight. Wow. Then how is it that the rich borrowed money to become rich when they had no money? Yes, it's not that they had no money to begin with, but if you know exactly what you're doing, you can buy assets with no money. And that is a lesson for another day. But to give you an example, um, to give you an example, my first investment property was worth close to $600,000, and I bought it with just $17,000 of my own money. That's it. That's all I had to pay. So there are ways to buy even $1 million businesses with no money down if you know what you're doing and you know how to do those things. You can buy businesses with no money. Zahid, thank you for sharing the life. Eren, I think you have done well for tonight. Alrighty, let's continue. So, reading numbers is looking for the plot. So, the numbers will tell you a story of where the money is coming from. This is the cash flow pattern of a poor person. And please look carefully. This is what most people have in their lives. They have a job which gives them income as a salary. Then they take that money and they spend it on taxes, rent, food, transport, clothes, education, whatever. And that's it. The money is gone. So no matter how much money they make, it all just goes out through the expenses. That's it. Now, this is the cash flow pattern of a person in the middle class. They have a job which gives them income as salary. Then they go out and buy some liabilities. So they have more money to spend, which means they buy a big and nice house, they get a nice car, they spend on consumer debt, which is credit cards and school loans, they pay for their university degrees. After that, whatever is left, they use to pay taxes, mortgage, car payments, credit card payments, and paying off their student loans. And that's it. They have no money left. That's middle class. Now, this is the cash flow pattern of a rich person. They have assets which generate income. So, what are those assets? Real estate, stocks, bonds, notes, and the last one, but not the least one, is intellectual property. From that, they generate income, rental income, dividend, interest, royalties. And going back to the question from the chat, how is it that the rich borrowed money to become rich when they had no money? This is exactly how they generate income first. And please pay attention to the assets. The last one is intellectual property. What does it mean? The very book that we're reading right now, Rich Dad Poor Dad, is literally how Robert Kiyosaki became rich. Although he claims that he learned a lot from his rich dad, he actually made most of his fortune and most of his money from this book. Rich Dad Poor Dad is the best selling book for 30 plus years now. And that's how he made most of his money. And then he also made some financial games, which were Cash Flow 101, Cash Flow 201, and so on. And that's how he made his money. That's how he made his income. So, your knowledge, your education, your books, your seminars, your courses, even your YouTube videos can be assets. And that's the beauty of the world that we live in right now. We don't have to go out and buy assets or build assets, build houses, uh, you know, create businesses. You guys, especially even at your young age, you can start creating digital assets, create a logo, create a video, even live streaming. The thing that I'm doing right now is a digital asset because it generates income. And this is how the rich people make money. They have assets that generate income, which they then use often to reinvest back into even more assets. All of these diagrams are obviously oversimplified. Everyone has living expenses, the need for food, shelter, and clothing. The diagrams show the flow of cash for a poor, middle class, and wealthy person's life. It is the cash flow that tells the story of how a person handles his or her money. And we can highlight this as well. So, if you have financial literacy, if you are a financially literate person, you only need to take a look at anyone's financial paperwork, and the cash flow will tell you all the story, where they spend the money, how they spend the money, and whether they are acquiring assets or making money work for them or not. The reason I started with the story of the richest man in America is to illustrate the flaw in believing that money will solve all problems. That is why I cringe whenever I hear people ask me how to get rich quicker or where they should start. I often hear, I'm in debt, so I need to make more money. Guys, and I don't know, if you know me from the beginning of this year, yes, I am exactly the same. What is a good way to become financially literate? Asking, Yahya is asking. This very live stream, these YouTube videos, the shorts, are a good way to become financially literate. There's one even better way to become financially literate, and that's what we're gonna start soon, maybe as soon as the end of December. We can play financial games because the beauty of financial games is you can try all of these things that we're learning about here in a safe and simple environment, and it's also much quicker. In real life, getting an investment property takes anywhere from months to a couple of years. But our brain doesn't distinguish between reality and a game. And I think what was the movie Gran Turismo, where there was this young man who played Gran Turismo so much he memorized every single track that's out there in the world, and he spent hundreds of hours racing cars on those virtual tracks, and he wins. So, good way to learn financial literacy is playing financial games, and I have a few that I would like to start playing with you guys. More money will often not solve the problem. In fact, it may compound the problem. Money often makes obvious our tragic human flaws, putting a spotlight on what we don't know. That is why, all too often, a person who comes into a sudden windfall of cash, let's say an inheritance, a pay raise, or lottery winnings, soon returns to the same financial mess, if not worse than the mess they were in before. Money only accentuates the cash flow pattern running in your head. If your pattern is to spend everything you get, most likely an increase in cash will just result in an increase in spending. Thus, the saying, a fool and his money is one big party. There we go. So, if you do not become more financially literate, doesn't matter how much money you have, you will keep going back to all the same situation time and time again. So, cash flow tells the story of how a person handles money. Let me highlight this again for you. I have said many times that we go to school to gain scholastic and professional skills, both of which are important. We learn to make money with our professional skills. In the 1960s, when I was in high school, if someone did well academically, people assumed this bright student would go on to be a medical doctor because it was the profession with the promise of the greatest financial reward. Today, doctors face financial challenges I wouldn't wish on my worst enemy. Insurance companies taking control of the business, managed healthcare, government intervention, and malpractice lawsuits. Today, kids want to be famous athletes, movie stars, rock stars, beauty queens, or CEOs because that is where the fame, money, and prestige are. That is the reason it is so hard to motivate kids in school today. They know that professional success is no longer solely linked to academic success as it once was. So that's the story. The the old story where you would go to school, get a degree, get a job, and get paid well, and then be able to do more with your life is no longer valid, I would say. Times have changed. We can see that Mr. Beast now makes much more money than anyone else could. So, because students leave school without financial skills, millions of educated people pursue their profession successfully but later find themselves struggling financially. They work harder but don't get ahead. What is missing from their education is not how to make money but how to manage money. Please, this is what we're going to learn here, how to manage money. Doesn't matter how much money you make, what matters is how much money you keep, how much money you get to make even more money for you. It's called financial aptitude or financial capability. What you do with the money once you make it, how to keep people from taking it from you, how to keep it longer, and how to make that money work hard for you. Most people don't understand why they struggle financially because they don't understand cash flow. A person can be highly educated, professionally successful, and financially illiterate. Please, I think we should highlight this as well. These people often work harder than they need to because they learned how to work hard, but not to have their money work hard for them. Shona says, so glad my family were taught how to keep money. And yes, it is so important, so much more important than knowing how to make money. How to handle money is more important. How the quest for a financial dream turns into a financial nightmare. The classic story of hard-working people has a set pattern. Recently married, the happy, highly educated young couple now share a cramped rented apartment. Immediately, they realize that they're saving money because two can live as cheaply as one. The problem is the apartment is cramped. They decide to save money to buy their dream home so they can have kids. They now have two incomes and they begin to focus on their careers. Their incomes begin to increase. As their incomes go up, their expenses go up as well. So, this is how their income statement looks. They keep working harder, getting promoted, their income increases, they both start working, but the expenses almost always are catching up and staying the same. The number one expense for most people is taxes. In Australia, before you even get your first pay, you get taxed immediately. Before the money even hits your bank account, you get taxed. And the minimum tax rate is 20 something percent, goes all the way to 40 plus. The number one expense for most people is taxes. Many people think it's income tax, but for most Americans, their highest tax is Social Security. As an employee, it appears as if the Social Security tax combined with the Medicare tax is roughly 7.5%, but it's really 15% since the employer must match the Social Security amount. In essence, it is money the employer can't pay you. On top of that, you still have to pay income tax on the amount deducted from your wages for Social Security tax, income you never received because it went directly to Social Security through withholding. Now, this is a bit different for Australia, but in essence, you get income tax deducted from your pay before you even get the money. Then you go to spend the money in shops and you get taxed GST, goods and services tax. Then, if you want to buy a property, you get taxed. If you buy shares and you make profit, you get taxed. Basically, wherever you turn, you get taxed. Eren, thank you very much. Thank you. All good. Um, that is the sad story. Going back to the young couple, as a result of their incomes increasing, they decide to buy the house of their dreams. Once in their house with a mortgage, they have a new tax called property tax. Then they buy a new car, new furniture, and new appliances to match their new house. All of a sudden, they wake up and their liabilities column is full of mortgage and credit card debt. Their liabilities go up. So, how is the situation today? Taxes and entitlement programs. Taxes around the world are getting higher and higher as social demands for tax dollars require higher property, income, and sales or value added taxes. Higher income create even more of a bracket creep as tax rates become more progressive and steeper to pay for social services, also called entitlements. Today, the government faces serious challenges as entitlement programs like Social Security and Medicare face insolvency. What does insolvency mean? People who depend on welfare are becoming more in numbers than the people who can actually produce income or do some productive work. So, this is how their income statement and balance sheet looks as they keep working and keep improving their income. Their income increases, their expenses increase, but their liabilities are also increasing. They're now trapped in the rat race. And there we go, rat race. This is where we're going to understand what it is and what it means. Pretty soon, a baby comes along and they work harder. The process repeats itself. Higher incomes cause higher taxes, also called bracket creep. A credit card comes in the mail, they use it and max it out. A loan company calls and says their greatest asset, their home, has appreciated in value. Because their credit is so good, the company offers a bill consolidation loan and tells them the intelligent thing to do is clear off the high interest consumer debt by paying off their credit card. And besides, mortgage interest is a tax deduction. They go for it and pay off those high interest credit cards. They breathe a sigh of relief. Their credit cards are paid off. They've now folded their consumer debt into their home mortgage. Their payments go down because they extend their debt over 30 years. It is the smart thing to do. But is it really? Credit card debt. Today, based on 2016 stats, US consumer credit card debt is at an all-time high, 779 billion. Is it all bad debt or good debt? Do you know the difference? Here we're going to talk about good debt, good debt and bad debt. Thank you, Eren. Thank you. We are 1387. 50% of the life goal is completed. Celebrate the moment. Um, any questions, guys? No, Eren. Thanks you. All good. Thank you. Eren really spoiled us tonight with all the gifts, man. Wow. Oh, we got a fest cheese. What? Thank you. Thank you very much. Thank you guys for all the gifts. And please, why is it called rat race? If you know how the rat in a cage, if you put it in a spinning wheel, it will keep going and have fun, but really go nowhere. That's exactly why this increasing income and increasing expenses and increasing liabilities is called a rat race. Because you think you're getting somewhere, you think you're getting a better job, a higher income, better house, better car, but all it does is keeps you within that loop and you keep earning more, spending more, earning more, spending more, and that's why we call it a rat race because it looks exactly like that poor rat or a hamster in a spinning wheel. Oh, it's been 47 minutes. Um, what time is it? 21:31. Shall we call it a night or should we continue or get to how much do we have? Well, there's fair bit to go. So yeah, if you look at this picture here, this is what red race looks on your income statement and on your balance sheet. Your income increases, your expenses increase as your income increases, and to make things even worse, your liabilities also keep increasing. Most people think that buying a house to live in is an investment. They think it's an asset, but it is not. Since the house that you buy for yourself is house that you buy for yourself, you need to pay your mortgage, you will need to pay taxes on it, and if you want to do renovation and all that kind of stuff, it basically takes money out of your pocket. Yes, it appreciates to an extent, but the house that you live in is not an asset, it's still considered a liability. And that's the sad story of the rat race. I think this would be a good time to end tonight's stream. It's been 50 minutes. My throat is still hurting from being sick for the past 2 days. I hope you enjoyed today's live stream. We got 5 people online, and Spark Gaming is saying he's gotta go. Thank you. Thank you for joining, everyone. Um, thank you for sharing the live stream. We've got 4 new followers. Amazing. And we have 2.3 thousand likes, 700 diamonds. Thank you guys. So let's call it a night. If you have a question, now would be the last chance to ask those questions. And I think